Let's get across the market open now. Scott Phillips joining us in Motley Fool. Scott, happy Friday to you. Well, let's take a look at what happened overnight. In fact, we've got that ceasefire between Israel and Lebanon that's been rejected by Hezbollah, although it looks as though any deal between the US and Iran is still stalled at this point. Oil prices coming off. What are you seeing at the moment more globally?
Yeah, mate, everything and anything. We are absolutely in a world of complete uncertainty, and maybe, as change is the only constant, maybe the only certain thing is uncertainty. Everything is in play. Everything is absolutely in play. And frankly, I think, if we think back to the tariff situation, it kind of has echoes of that. When things first happened, you see this massive big conflagration on the markets, and then people kind of go, oh, so this is just an ongoing thing now. We're kind of getting used to it. So that kind of feels a little bit like where we're at. The movements aren't so big. Frankly, there's no more certainty than there was when prices are $120 a barrel for oil, right? So what's changed? Nothing really. I mean, the talks are ongoing, so maybe there's some sense that there'll be a conclusion at some point. But it does kind of feel like the overreaction early, coming back to some sort of more reasonable premium for risk, I suppose, is what I'd probably constitute it as. Knowing full well, by the way, if this does drag on, we still have 20% of the world's oil blockaded. So there is very much still an end game here in which oil is incredibly expensive. The world's economies go into effectively a recession because of that oil shortage. So that's still on the table. We just can't kind of sweep it away. I guess the hope from markets, and basically inferred from prices, is that it's less less scary. They're less fearful than maybe at the outbreak of hostilities. But it really does feel like we're in between those two scenarios. Almost always with probabilities, the oil price is probably almost certainly not worth the current price, right? It's either going to be a lot less or a lot more. This is the weighted bet. This is the probabilistic bet about, well, there's a chance of an upside, chance of a downside. Where do we think the odds are right now? And frankly, doing the maths, it's about 50-50. If you think about where we were, 67 odd bucks a barrel, got up to $127 a barrel, back to 97. We're kind of almost exactly halfway in between where things were before and then at the absolute outbreak. So the market kind of taking a bob each way.
Now, Scott, a little bit of a rotation out of tech on Wall Street overnight. Some weakness there, particularly from Broadcom. Look, we know how far that AI rally has run. Does that raise some concerns for you? Do you think that would make sense to take profit at these levels?
Man, I'm not a trader, so not really. I'm not taking profit. I believe in the long-term story yesterday. I believe in the long-term story today. If shares were overhyped yesterday or overvalued yesterday, I should get a dodge today anyway. So not on the move itself. I will say what's interesting, mate, is that this is happening despite what's likely to come next, which is the listing of OpenAI and Anthropic. We know, of course, SpaceX, and while we think SpaceX landing rockets back on their launch pads and satellite internet, it's also the XAI business. So there is a lot of AI still to come. I don't know that the boom is over. I do worry, as always, mate. As you know, I'm happy being an optimist when everyone else is pessimistic rather than an optimist when everyone else is overly optimistic. The prices being talked about for AI require a heap. The price for SpaceX, let's say it's 1.8 trillion, just to pick a number. This business is only doing $18 billion in revenue and losing $5 billion a year. Doesn't mean it can't turn it around. Doesn't mean it won't be worth the current price at some point. Maybe it already is, and maybe I'm just underestimating the future growth. But there's a lot built into all this sort of stuff. Trying to look at who's going to win by how much and be worth what, they are really big questions, even if the underlying trend is real. You've only looked back to COVID and the Zoom share price, for example. Went through everyone's going to use Zoom. Turns out we all still do. Microsoft Teams is around, there's others, but it wasn't that we were wrong about the idea, that is, video conferencing here to stay. Just what is the valuation on that basis? How much should we pay for those shares? Got to disconnect the business and the share price, put them back together only when they make sense. I'm not wading into the SpaceX story just yet. Happy to watch from the sidelines. If I lose some money or miss out, then so be it. There is a lot baked into that share price. Maybe if anyone can do it, Elon can, I don't know, but the market is going to grow phenomenally if it's going to justify that sort of market cap.
Well, let's come back down to earth then, shall we, Scott? And look at what we're seeing on the local market. Now, yesterday, Treasury were having an investor day and announcing fairly dramatic restructure of the business. Market liked it. What did you see?
Yeah, you might say from the sublime to the ridiculous. I'm a Treasury shareholder, Andrew. I've got to say, I think this might be the third or fourth restructure plan, strategic announcement they've made. They keep reshuffling the deck, right? You put everything, you pull the Penfolds apart, then put it all together. Put it all together now. Maybe sell off some of the brands, maybe sell off some of the wineries in the US. Look, new CEO, new direction, I suppose, and eventually the market figures they've got to get it right. I think the shares are cheap based on a long-term view. That's why I own them right now. Yesterday's announcement, I don't know. I would have got that excited about it. I mean, I liked it. I liked it anyway yesterday, so I'm happy that the shares are up. But I don't know whether the 10% share price jump is justified on an announcement. Yet another announcement. I do like the direction. The non-profitable, the unprofitable commercial brands, just got to get rid of them. They tried to sell them, decided they couldn't, then wanted to hold on to them, which I think was a bit of folly. Trying to do the same thing, expecting a different result. If you can't get a price for it, it loses money. Get rid of the thing. Focus on what matters, and that's exactly what they're going to do. So I think that makes a whole lot of sense. Wine is such a stupidly complex category. So many brands. The brand's largely not worth anything at all unless you can get reasonable pricing power. And what's really frustrating for Treasury shareholders, including me, the Penfolds brands is astonishingly good. It is just a powerhouse. If you look at the numbers where they used to report them separately, Penfolds was absolutely minting cash. The others were losing a fortune, or at least hardly washing their face. Now you kind of go, well, what are we doing? Why are you playing in that end of the market? I suspect in the past they've tried to avoid a write-down of asset values and tried to somehow kick it along. Maybe they've tried to hope they'd get a buyer eventually. At some point you say, you know what, guys, we are just throwing good money after bad here. So I hope they follow through on this one. I hope they do make some changes. Talking about selling the US wineries would be a really significant strategic change. They built that up over a decade, maybe 12 years. Selling them now, I don't know. Look, honestly, if you can generate some return on there, if you can't get returns on the capital that's deployed in that business, then yes, by all means, sell it off and take the money, give it to shareholders, or retire the debt, or do whatever you need to do. I just hope there's no short-termism there of let's staunch the bleeding, do whatever it takes, and then in a few years' time, wish they'd held onto those assets.
Now, elsewhere, Scott, the iron ore price taking a bit of a tumble overnight. Look, interesting what's going on. The Australia's big miners essentially want a government intervention to counter that China iron ore monopoly.
Yeah, they do. Graham Samuel, the former ACCC boss, actually rejected a merger of the BHP and Rio iron ore businesses back in the day, might have a few years ago, I can't remember. But basically saying overnight or today, he would potentially look at that differently now, given the changing dynamics. And those dynamics specifically, China buys about 80% of its iron ore through a single buying body. And that's about 52% of the world's iron ore. So effectively, one buying group buying half the world's iron ore and 80% of China's needs. And Rio and BHP saying, look, we're not allowed to have a cartel-like arrangement. We're allowed to compete, to work together on doing a deal with China. That would be illegal under Australian law. But hey, look over there, they're doing it, and they're getting a better price for iron ore because we can't. They're saying, let us work together on that. Maybe put some sort of that days the old Australian wheat board, right? We're back to that sort of level. A single selling agency potentially. They haven't been that clear about what they want. They want to be able to cooperate is what they've asked for. What that looks like is hard to know. Now, it makes commercial sense, right? If you've got a big guy doing the cartel on the buying end, you want to be able to do it on the selling end. It makes perfect sense, except we also know, speaking of wine, what China does when they're unhappy with Australia on the trade front, right? Tariffs and blockades and all sorts of stuff. So it's a really delicate one for the Australian government and for the miners. If we put China's nose out of joint on this one, even though what they're doing is unfair, if we try and combat that, we don't know what ramifications we may feel. So really high stakes for the companies, high stakes for Australia diplomatically, but also Rio and BHP kind of dangling the tax carrot in front of the federal government saying, look, if we get less for our iron ore, you get less in tax revenue, maybe let's chat. So appealing to self-interest, always a very, very good approach. We'll see where this one goes. I don't know where the government will go. I suspect they may be at least prepared to listen, given what's become a more interventionist government policy right around the world, including here at home with the Future Made in Australia and other things. So, yeah, we'll see how that one pans out. Shareholders hoping it works and hoping they get away with a higher price. The diplomats may have a different view.